Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining me for this segment, we have Jen Wing. She's the head of asset management over at GeoWealth. We're going to discuss how RIAs can grow their business using models in 2023. Jen, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
How has the model landscape changed and evolved for RIAs? What are some trends that you see at GeoWealth?
I'd say the overarching trends that we're seeing in the model landscape is growth. And you're seeing that both from the demand side as well as the supply side. So if you look at the demand side, you're seeing RIAs really adapt a model approach. And if you look at Morningstar's reports and their numbers from last year, for example, they estimate that there's about $350 billion following models today. That was kind of early in 2022, and that was up 22% from the year before. So growing really fast, you're seeing assets go into the space, and then in turn, you kind of have this cyclical thing going on where then asset managers are launching more models to keep up with the demand. So Morningstar started their model tracking in 2019. Now they have over 2,000 individual models that they're tracking, and you've seen just incredible growth in that space. And what we've really seen when you look under the hood is it's no longer just risk-based models, right? Now you're seeing boutique managers come in, you're seeing alternatives managers come in, and so you're really seeing managers that are coming in to allow advisors the ability to create these mosaics of models and UMAs, put their stamp on it. And what we've done in GeoWealth as a direct result of client requests is increased our model marketplace as well. So we do diligence on all our models, and clients have asked for more. So we've increased it threefold, almost fourfold over the last year to really give clients more options, more breadth, and more choice in that space.
We'll get to clients in just a moment, but I want to ask you, what's the benefit to advisors for using model portfolios?
I think there are some major benefits for advisors, particularly in this type of market environment, which we could talk about a little bit more, but it gives them time, right? Time is one of advisors' most precious commodities, right? And so allocating to a model provider, according to Cerulli reports, for example, an advisor that delegates or outsources to models spends about 10% of their time on investment management activity, right? But an advisor that does it in-house is spending between 20-30% of their time doing all sorts of investment management activities. So that's time that they could spend getting in front of clients. And the other thing that models really do for advisors, which also gives them more time, is gives them content and communication. So we're working really hard at GeoWealth to partner with our asset management providers that have these models to get streamlined content and communication. We can white label it for them so it still feels like theirs. But they don't need to watch what's going on in every single market at any given time and what the ETF is doing and what it's not doing. It's really helping them scale and giving them that time that they can get in front of clients.
What do clients want when it comes to investments, and how has that changed with the market volatility we've seen?
I don't know that it's changed. I think they want what they've always wanted, which is to trust their advisor. But that's probably increased that need for trust, right? And during market volatility, advisors really needed to be everywhere. They were spread really thin. They needed to be watching markets that are unprecedented, watching equity markets and fixed income markets go down at the same time, watching one economist saying this and one saying the other thing, and it's just they were spread very thin. And then on top of it, clients were scared, right? Clients wanted to jump out of markets. They wanted to redo their whole investment portfolio, and they really needed to get in front of them to tell them to stay the course, to maintain their investments, and help them plan out their goals instead of product sales. So I think the volatility has really only accentuated the fact that advisors really need to be able to build that trust. And I think the time and the content are two ways. And then on top of that, I read a BlackRock report that was really interesting. When we think about your question on in these volatile times, they did a report after the depths of COVID, right? And they looked at advisors that outsourced investment management and that insourced investment management. And the ones that outsourced investment management, 92% of them felt that outsourcing to models helped their business process, which is amazing. they saved on average 9 hours a week. So that's 9 hours that they could put in front of clients every single week. And then the really interesting one was that 89% of them, even during the depth of COVID and the volatility, were able to win new business. So as advisors are out there, they've got the AUM and the markets working against them, like they got to double down, right? And so seeing this data coming out of BlackRock was really powerful for me, particularly in the middle of 2022, when it felt kind of like that, right? And then in 2023, there's still a ton of uncertainty. So to be able to outsource to a model provider that is going to give you they've got incredible resources, but they're all going to give you the content and the commentary. And then if you work with someone like GeoWealth, I think what's interesting is that we're able to distill that for you, white label it, get it in your inbox, so like you're ready to go every single day no matter what is going on in the markets.
Why wouldn't an advisor outsource, the investment management part?
So that's what I wondered when I first started. I started at GeoWealth a little over a year ago as the head of asset management, and I really spent the first 6 months just strictly listening to RIAs and clients and figuring out what they needed. Because my goal was not to build out a program, and it was to give clients whatever they wanted, right? That's kind of our goal at GeoWealth. We know they want the flexibility. I think in terms of models, there are some really strong myths and misconceptions out there that have stopped advisors from going into models. There's many, but the first one is they don't want to lose control. Very important to advisors for so many reasons. And the second one is they think it's really expensive. So in terms of control, I think what they don't realize, and what we've tried to build out, at least at GeoWealth, is that there are so many ways that you can partner to outsource investment management, right? So we have an investment management consulting program, for example, and you can outsource ETF due diligence, you can outsource mutual fund due diligence, you can outsource portfolio management, you can outsource capital markets assumptions and asset allocations, you can outsource trading operations, all of these things. But the point is that there's a spectrum of ways that you can outsource investment management. And again, when we're partnering with clients, and now we've got all these models we can use to build out these customized mosaics of models where you can have the best large cap value manager with the best fixed income, and then if you don't like the one I like, you can swap it out for another one, or if you want active or passive, you can do that. And then in terms of costs, number one, I find that it's not as expensive as they think it is. So when you really dig in, they're like, oh, it's not as bad as I thought it would be. But also, you got to weigh the costs against the financial benefit that you get from outsourcing, right? Again, the time, the content, the commentary. You no longer need a CIO to spend trying to keep up with the resources of BlackRock that are global and everywhere and broad. And then you can put that person's time into maybe some clients that need white glove service, right? So we've seen a lot of clients start to segregate their business and build out these models, super scalable, with the white labeled commentary for their kind of mass affluent or their smaller clients. And then they can use those resources to the high net worth, the sophisticated, that needs the more complicated solutions. So we're starting to see that bifurcation for the really big RIAs, and then the smaller RIAs delegate the whole thing.
Yeah, all right.
So,
well, makes sense to me.
Yeah.
All right, Jen, appreciate it. Thanks for joining us on Trade Talks.
Thanks for having me.
And thanks for joining me in Miami. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.